So, good afternoon, everybody, and welcome to World of Open Account. Welcome to our new webcast, our web meeting. This time we are again with our good friend André Casterman, who will lead us to the world of funding platforms. Everybody knows André, but he will introduce himself, of course, as well. And we have also Atul Khekade, who is the co-founder of XinFin Network and TradeFinex, and he will also explain more about this very interesting new initiative. You have the possibility at all times to ask questions. You have a Q&A button at the bottom of your screen. Please use that during the session. We will look at the different questions, and at the end of this session, we will definitely go through all the questions and try to answer them live. The meeting will also be recorded and will be available after today on the World of Open Account website. So that was for my brief introduction. I'm going to hand over immediately to André. André?
Thank you, Eric. Thank you, Eric, for the introduction. Welcome to be back on the World of Open Account. Indeed, we want to talk about the ecosystem of funding platforms. We see many developments across the whole trade space, and we thought providing a helicopter view might be of interest to you. Not only about what has happened over the last 2 decades, because quite frankly, I can refer to some of those developments who started 2 decades ago, but I also wanted to provide you a look at what is coming from the technology world, in particular from the digital asset world. So definitely, Eric and I wanted to provide a session on those alternative financing options, those working capital platforms that are providing corporates and SMEs with new options to finance working capital. But it's also about alternative technologies. And this is where I have invited a guest speaker on the digital asset technology, Atul Khekade, who is co-founder of XinFin and TradeFinex. And the goal of the second part of the presentation is to highlight how a new infrastructure technology can provide new avenues also for platforms to seek funding through digital assets and engage with more funders in support of the SMEs and the corporates they serve. So with this, I'd like to Atul to introduce himself. Atul, over to you.
Hi, thank you, André. Thank you, Eric. Hi, everyone. I'm Atul Khekade. I've been a serial entrepreneur, pretty much involved in the banking and fintech space since very early on. I've been, working on banking mobile apps when no one was using mobile phones, and I was that was for Oracle. And then recently, I had that was actually 4 years back. I had set up, I played a part in setting up one of the first production blockchain networks for fraud prevention in trade finance industry. That was one of the first in its kind, and now it's growing, of course. And with XinFin, we are, providing digital asset infrastructure for the trade finance as well as the receivables industry to provide better liquidity for MSMEs.
Thank you, Atul. We'll come back to you for indeed the second part of this session. Let's start first with taking a helicopter view in the world of funding platforms. I like to start really from the top view and introduce the ecosystem as I see it. Of course, there are different ways to picture this, but I like to start from the space, the business-to-business space, where buyers and sellers are initiating transactions. This is where trade starts, not trade finance necessarily, but trade. And those transactions, purchase orders and shipping flows and invoices that will be exchanged between buyers and sellers will then indeed create trade finance, receivables finance opportunities, whether it's on the risk side or on the funding side. So starting from the B2B side, we can identify a first set of platforms, the business-to-business platforms, where those transactions are increasingly digital, structured, and where the whole workflow is managed from a corporate to corporate point of view. So the financing is definitely an add-on for those platforms. It's not their major goal, but they have the data about all of those transactions, and as well as the history of the relationships between buyers and sellers, which we will see will prove interesting for those financiers and risk takers. Between the buyers and the buyers originators, as well as between sellers and the sellers originators, then the second space is the well-known and quite crowded space of platforms, where we have seen treasury platforms popping up since, again, 2-3 decades. Treasury platforms who help treasurers indeed manage their liquidity positions, submit files of payments. I've been personally very much involved into that world with Swift, where we provided the Swift platform to corporates to work on payments and cash management with their various bankers. But here, definitely those treasury platforms are limited to treasury liquidity, cash management. And we have seen over the last years a series of export funding platforms, mainly popping up, as well as approved payables and sales finance platforms popping up on the buyer side. So those platforms are often specialized, focusing either on the buyers, such as approved payables platforms, or focusing on the sellers, financing unconfirmed receivables, for instance. Or discounting letters of credit and so on. So that's the space where indeed the financing function is key, and where the transactions are often starting when the financing request is needed. And often this is kind of a challenge because there is a lack of visibility on what has happened with that transaction from the start, which is at the top of the chart in the B2B world. And this is where data feeds are enriching those platforms to indeed perform credit scoring, to feed algorithms on the risk side mainly. That space, so between buyers and sellers and between buyers and buyers originators, as well as between sellers and sellers originators, is very much crowded. We will see with a lot of platforms. And then you have the world of the secondary market, where originators, whether it's on the buyer side, on the seller side, are actually working with liquidity providers, with risk takers, whether we talk about credit insurers or institutional investors, in order to indeed manage their balance sheet mainly. And we will cover that space as well. So I would say 3 spaces: B2B, corporate to bank, and then bank to institutional investors and credit insurers. So primary market is more identified as this one, whereas the secondary market is more identified as the world where distribution of assets take place. So I hope you follow me. Let's start now first digging into the primary space, focusing on those platforms helping buyers and sellers. And definitely the focus is here on helping indeed the CFO, the treasurers, manage working capital, not only liquidity as treasury platforms would do, but those working capital platforms, we could call them asset aggregation platforms, funding platforms, or sales finance, or export funding platforms. There are different names. I would call it here working capital platforms, to cover both the buyer and the seller side, are actually technology platforms. They are not running balance sheets. They are often helping indeed the treasury team to get cash in exchange for trade assets. And they are supporting a series of instruments, such as traditionally the first step was on approved payables, because that has been quite an easy step to fund transactions that are approved by the buyers. but more and more we have seen over the last few years that receivables platforms have emerged where corporates or SMEs can submit individual invoices for funding. And of course, the challenge for those platforms is to find the risk and the funding appetite. And this is on the right-hand side, where could be banks, could be non-bank financial institutions or institutional investors working with asset managers, sometimes also family offices or corporate treasuries themselves would actually act as financiers, risk takers on those platforms, working with or without credit insurance. So we have seen a lot of those platforms popping up in the market. And as I said, they are not running a balance sheet. They are purely aggregators of assets, matchmaking the funding requests coming from corporates and SMEs with the funding appetite and risk appetite coming from the banking and the capital market space. The types of access indeed can be via those web-based platforms acting as technology intermediaries and asset aggregators. These are the working capital platforms I just talked about. And the benefit for corporates when working with those platforms is that they can find sources of funding they would not find on an individual basis. However, we have to recognize that those platforms are just a new option on the market. They are not replacing the one-to-one deals between those funding sources and the corporates and SMEs, one-to-one relationships via proprietary websites, proprietary channels, or sometimes human interactions as well, are definitely still very relevant as well. So I would think those platforms are providing an additional option, certainly of interest for those corporates that are looking for new sources of funding, basically. So I would not discount indeed the one-to-one capabilities and the proprietary channels that have been built over the last few decades between the corporate space and the sources of funding. Now, what are the benefits of those matchmaking platforms in the corporate to bank space? They are, I think, highly specialized. It could be years ago, it would be mainly on approved payables, because this is a low risk type of asset, approved payables to fund for those having the appetite on the right-hand side. But sometimes they are also specialized in cross-border versus domestic. So I think for each of those platforms you would encounter, it's important to understand where their focus is. And they will be successful thanks to their focus and specialization. Doing the best for large corporates or for SMEs is totally different market. So usually we find themselves highly focused and specialized in terms of segment of corporate, in terms of geography, domestic, cross-border, for instance. Most of them are using internet-based connectivity. So they are not selling software to corporates. They are really providing a pay-as-you-go kind of service, paying themselves on a success fee basis, where they take a margin out of the funding fees. And often they have different ways, different algorithms to match make funding requests coming from corporates or SMEs with the various funders. With some of them, there is no need for bilateral relationship with funders, which is quite interesting because it decreases the need for KYC on the funding side, depending also on the regulatory requirement, of course. And it's, as I said earlier, is definitely an opportunity for those corporates to find new funding or insurance capacity. Certainly of interest when the main banks of those corporates or SMEs are not willing to engage on a lending basis, and when banks want to restrict themselves to payments and cash management, liquidity management services. So if the specialization of those platforms introduces a number of drawbacks, because if one corporate wants to cover a set of requirements, maybe there will be a need to use a variety of platforms. So the challenges for corporates to choose which platforms to work with, in case there is a need, indeed, an interest to find new funding sources, is that many of those platforms have, as I said, highly specialized value propositions, which are also very different. So there is no standard in that space, even not in the mature approved payable space. And there is always a platform-specific contractual structure and also proprietary connectivity, data formats, APIs. And often we see that the geographical scope of those platforms can be limited, not always, but can be limited. And if it's not, then it was investigating how they achieve a global reach. And it's interesting also to find out the type of matchmaking processes, algorithms they embed. Is this just a portfolio or a pricing request? Is this an automated auction-based matchmaking? Does it allow portfolio sales or purely transactional sales? Is there any use of securitization or fund structure or use of MRPA structures, which is an interbank master risk participation agreement as it stands? So it's interesting to understand how the platform is actually automating those processes beyond the pure digitization and aggregation of assets. So those challenges are real, certainly for corporates at global level, that might end up working with multiple of those platforms to cover multiple geographies, for instance, or multiple types of instruments. And those challenges are valid for the funders as well, because funders that want to reach to originate assets via those platforms will have the same challenge in terms of having to connect to a number of those platforms. Now, if we move now away from the corporate to bank space and go into the business to business space, so between buyers and suppliers, which is a second space, but the top one on the ecosystem slide I started with, we see there that this market is also very busy since decades on platforms. And we have seen very interesting developments recently. I would start with the electronic invoicing, which is a market that developed over the last 10 years for sure, thanks to regulation. The regulators have mandated electronic invoicing in some geographies, not only in Europe, but also in Latin America, for instance, or often for tax reasons. So I won't go into the details there, but you would see a lot of dozens of platforms digitizing invoices. And actually it's a kind of a gold mine, but untapped, because those platforms have digitized invoices with structured data sets, but have rarely found a way to provide a financing service on top of those electronic invoices, such as an early payment capability. There are some opportunities that were materialized, such as the Tolia Green Seal relationship, that were transformed as approved payables and then repackaged into notes. Quite an interesting model that are being replicated by others. There are more and more banks working with some of those players, such as large banks working with Tolia or with TradeShift, which are major electronic invoicing platforms. So we see more and more links between this world of electronic invoicing. Again, quite interesting because of all the data set they have on those trade flows. And by linking with funders, the market can bring the needed working capital to buyers and suppliers, depending on the instrument. Some of those platforms have evolved to procure to pay, whereby they manage the whole workflow from contract management to payment. This is the case for Coupa, Basware, TradeShift, SAP Ariba. And closer to our world of trade and receivables financing, we have seen the emergence over the last two years, I would say, of industry-specific platforms such as Metals Hub in the metal space, I would say, but Covantis in the agribusiness, involving the large ones like Bunge, for instance, and Congo in the energy space. And those platforms are also aiming to digitize and structure all of the interactions between buyers and suppliers in those specific industries. And of course, the need for financing in those B2B flows is key as well. So we already see developments with links to banks from those platforms. So this is a particularly interesting space, even if we have less platforms here than in the previous space. It's interesting in my view because those platforms manage the whole transaction lifecycle. And we know that for risk scoring, for funding, having access to the history of the relationship between buyers and suppliers, having access to the payment patterns is key for risk scoring. And tapping into this data is critical on the funding side, which is where I think there is a big opportunity for those electronic invoicing players to develop their business. Of course, some big techs have understood that since years. It's not new. And this is where you would see Amazon or Alibaba getting into the SME financing space. Let's not forget that they have full visibility on the performance of SMEs selling through their platforms. Let's now go to the secondary space. I would say possibly the end of the transaction. You know, it was created in the B2B world, it was financed in the corporate to bank space, and then it is actually sold on to background investors such as credit insurers and institutional investors for originators to manage their balance sheet. And in this space, I'd like to highlight one of the platforms, which is a WOA member, which is the reason why I highlight it here. It's also, in my humble view, the most complete distribution platform working with credit insurers and institutional investors on the basis of traditional methods such as the MRPA and the SPV structure. And this is the TradeTech platform, which is purely focused on this secondary space, but not yet using digital asset technology, as we will talk in a few minutes. So with this, I have covered the three spaces: corporate to bank, where you see a lot of platforms, mainly at domestic level, but also at cross-border level; B2B, where the transactions life cycle occur and are managed, and secondary space with these platforms. There are other platforms in that space, but not WOA members, and also not as developed as that one. So for some of you, this might look like the future, but actually this is the past and the present, because all of those capabilities are in production. I could have shown a slide with all the logos of the platforms I managed to identify, but there are many more. So in my view, what I've talked about here is really today's opportunities, based on very recent developments or developments that started 20 years ago, such as electronic invoicing. What we're now going to look at is what is coming from an infrastructure, a blockchain technology, and a digital asset capability. How could those platforms grow further thanks to additional technologies, alternative technologies such as blockchain and digital asset? And this is where I'd like now to invite Atul to introduce us how XinFin and TradeFinex can help those platforms and those funders thanks to advanced technologies. Atul, over to you.
Thank you, André. That was a very good view of how the legacy systems and some form of recent developments are working on with right now. So before jumping on the next slide, from where we are going to primarily explain, why what we are really there offering as an infrastructure and a liquidity, decentralized liquidity pool provider. But in one of the slides, André mentioned all the drawbacks, that the current systems provide, and it will be, more kind of very optimistic for me to say that the tech that we have, the market infrastructure that we have, the one that will power our tomorrow, is going to solve most of those problems using blockchain and digital asset technologies. Some people would say that it's quite an overstatement, but maybe as we go along this presentation, that is the point we will be able to convince some of our attendees here that all the segregated or disparate systems and platforms that are currently lying out there, and the liquidity pools that exist across alternative asset funders or banks or family offices or individual investors, there's indeed a way for all of that to connect together and to create much larger and robust yet decentralized network platform infrastructure for all of the fintech banks and initiatives and platform to connect for indeed achieving the eventual goal, which is actually helping the MSMEs. Yeah. So what do we really do? I'm sure most of you know about, maybe have heard about blockchains, bitcoins. Bitcoins is the word that most people kind of know, they're not so comfortable with. So we don't do that. We are more focused on bringing the technology in the legacy banking and fintech world for creating more liquidity for MSMEs. And to walk you through some of the objectives that we are trying to achieve, I'm going to make it really simple for you to understand, what is the real need of the market infrastructure technology that we have in place for everyone to connect to it. First point here is digitization. I think that's what most of the people talk about. They know that, okay, instead of going to the bank and actually submitting my say export finance request or something like that, what I can do now, especially some of you may have received that kind of emails from your banks in these days, that, okay, I'm sending you this PDF and you have to electronically sign it, right? So that's the first step that we have actually started in the next, the future implementation that is about to happen. So digitization obviously makes it really, really easy for the various processes to be, streamlined and, reduce obviously the time for sharing and getting much more, documentary evidence in electronic form to be shared across multiple parties, departments, whether it's inside one bank or one institution or multiple institutions. But going towards a decentralized or blockchain-based, digital asset-based technology, digitization is not where we stop. So there is an additional key feature of tokenization there. And to simply explain to you what tokenization means is that, let's say you are carrying one signed document. It could be related to a trade asset or a loan document, and you're physically handing it over to the bank, right? So once you hand it over to the bank, you no longer have the copy of it yourself. That's actually what tokenization is all about. So how tokenization creates a more robust facet for digitization is that now the document that you have handed over as in the digital form is not just handed over to the other side, but it's the only copy that exists. So that means once you've given custody of it to someone else, that kind of changes the ownership of that data or that document from you to the other side. And that's what brings a massively powerful feature to what we're trying to achieve here, because once you can do it over a global network, right, that's when you can start to unveil all its features. And that's when now you come to something like fraud prevention, right? Let's say you now have a specific set of data or document in a token form. You can actually, because it's electronic, you can compare it with multiple such documents and data forms to prevent fraud, right? Because there is obviously double financing of instruments or totally fraudulent kind of trade assets that can also be traded, causing investor loss. But what the technology then provides you is fraud prevention, because now that data is tokenized and you can compare two different versions with each other, and if they match, they'll be flagged immediately. The next 2 points are more from the liquidity side. So let's say there's a Japan-based alternative asset funder who is trying to buy into an export finance trade asset that exists out of, say, between the corridor of Africa and Europe, right? Now, in the traditional environment, their alternative asset lender is still not able to get any kind of counterparty risk mitigation, or maybe something in his form where you can immediately trade to the secondary market for another alternative asset manager. And how that happens is, once you have all this in token form on the XDC network, on the XinFin network, and we'll get to that in the coming slides, there is a common utility token standard that you can switch it to, and it has its own liquidity. So you are basically, across borders, you are able to mitigate your counterparty risk, because you are now traded or exchanged that document with a common protocol token that you can sell back in the market and realize your liquidity. The last and most important point is settlement. And most of you might be knowing there's this race of central bank digital currencies or tokenized cash that's happening in that you're reading about in the market. So let's say you have those tokens. Let's say you have the XDC against which you exchange the export finance document. How do you actually settle it with the Japanese yen or with the Singapore dollar or with the euro? Right? For that, the actual central bank initiative, or through the banking network, you need to have an actual tokenized cash system or a settlement system that you can exchange it with as well. So this is what makes it more powerful, that now you are able to exchange that asset across multiple of digitized or tokenized or digital cash mechanisms in your bank account almost instantly. So all these, when combined over a large network, gives this market a much powerful feature that would be able to get the solution for all the shortcomings or drawbacks that André mentioned about in one of the slides. Powering this use case, the one that I spoke about in the previous slide, what we have is actually a decentralized infrastructure network. Now, what do I mean by decentralized? I was speaking to André the other day, and he was asking me, are you a transfer agent? Are you a custodian? Are you a fund? We are none of that. We are a network for all of these regulated institutions, or regulated asset management funds, or say banks or fintechs or transfer agents, to actually work with each other using this common infrastructure. So how does that work, right? On the right-hand side, you are able to see a diagram. And if you search something like a hybrid blockchain network, XinFin is the first one that will come up on Google. And there's a reason for that. We intended it that way. For example, people are not used to, the traditional finance world is not used to the environment where everything that you do is open, right? Like, let's say your loan document, no one is comfortable when it is open or when it is shared across say publicly with someone. But at the same time, people want to absorb or acquire the liquidity that may be available there in the market from multiple funders, such as family offices or alternative asset funders, right? So there's a way we have devised for both of these functionalities to work together using a tech called hybrid network. So for example, so the first thing is you have your own legacy private systems, right? Where you have all your data, which is very sensitive. But at the same time, let's say you want to work with an asset manager based in Japan and Europe, you want to attract that liquidity. So you want to give them that transparency. Again, if they want to sell it back in the secondary market, you want some more transparency to that process. So all those data that you need to make it more liquid can be shared on the public network across all the network members. We call it master nodes because they all run their own validation servers. But at the same time, you're able to keep the key sensitivity or privacy of your data with you. So you're able to achieve a far more bigger network effect and interoperability using the underlying protocol network that we have that powers this infrastructure for the use case that we spoke about. So we have a network that currently is supported by 108 live nodes. These are obviously some individuals, businesses, MSMEs that are running it. But then again, there are around a total of 300 combining the backup nodes that maintain the network in case of there are any issues. And how does this work then? You basically have its own liquidity channels which are spread out across different jurisdictions. So the token on the network, the main utility token on the network, XDC, you can trade it against euro, you can trade it against US dollar, you can trade it against Indonesian rupiah. Obviously, right now the volumes are not to the level where you can do billions of transactions, but it's picking up. The volume is picking up, and most of the use cases that I spoke to you about as our objectives can be achieved in its current form in a very live environment. Of course, talking about so this is the network again that powers the tokenization of different trade assets. The smart contracts can be configured in a way where multiple parties, what you had paper contracts, paper-based contracts, even now you can put that in a fully digital kind of structure so that no single party is able to violate their terms of contract because the entire network is kind of governing it. Again, going back to the underlying infrastructure, we keep speaking about the fact that we are interoperable and decentralized infrastructure, a liquidity pool for the trade finance receivables market to work together, with interoperability. But there is obviously many people will be talking about what is how do we do it? What is the regulatory angle? So we have a company called TradeFinex Tech Limited, which has a regular license from Abu Dhabi Global Market, which is one of the most forward-looking regulator and award-winning regulator who allow us to basically get the institutions comfortable by doing these transactions in a regulated environment. We're also part of obviously ITFA FinTech Committee and the Digital Negotiable Instruments Initiative, across which we are going to start some transactions. So the license that I spoke to you about, you might be knowing, obviously you are aware that the securitization process and how it works, right? That's something that you're used to. But when it comes to digital token, you need to have a digital representation of that securitization, the custody infrastructure for electronically holding it, obviously issuance of it, exchange of it in your banking channels or in a tokenized fiat channel. So all those activities can be done in a regulated environment that using the network that we have in place. Okay, coming back to the point again, we're talking about infrastructure. So we are very much there for the companies, the fintechs, the more aggressive tech hungry banks who believe that this is the future. So we have an underlying infrastructure for all of them to work together. One of the biggest asset class that's developing, as all of you know, is the alternative lenders, right? And in the blockchain and digital asset world, there is a ton of them, and it's growing, and there's going to be more likely even bigger and bigger family offices. Even I'm very sure somewhere around the line, even the Blackstones and the KKRs will come in the picture, and they'll add their liquidity to the alternative asset uh, lending infrastructure or a decentralized pool of the network. So for fintechs and banks to really connect their origination channels to this fund over a network that basically does everything digitally and electronically is, you know, what the whole game is all about. Again, this basically sums up what I've been talking about. That even in the earlier part of the slideshow that you saw, there are all the working capital platforms, and they are kind of segregated in nature. They don't necessarily pool the liquidity with each other. So every platform may have its own liquidity, its own API calls, its own legacy system, and there are hundreds and hundreds of them. And that also, if a SME and corporate has to really take that liquidity, they basically have to connect to each and every of such working capital platform. But by having this decentralized infrastructure and liquidity pool in the background, we allow all of those platforms to connect to this liquidity pool in a real-time settlement token-based format, which is powered by obviously XDC, the token that powers the network. But again, XDC is not the settlement option, not the only settlement option there. We are looking forward to working with the tokenized representation of cash, or eventually when the central bank digital currencies will be onboarded or will be interoperable with them in a big way, so that you can actually settle using a digitized euro version or a digitized Japanese yen version or a digitized SGD or a yuan version in a format where the settlement is instant finality, and you can withdraw it in your bank account within seconds. So we have a small demo that maybe André will play here, and that's that's how you become part of the network. So all the fintechs, banks, or such platforms out there, this is the demo that you can check.
Set up Masternode. Log on to https://xinfin.org/setupmasternode.php. Hello everyone. Hope you are doing good. Set up Masternode with just one click. For now, you can download Windows and Linux. Mac OS will support soon. You need to just set up and install the one-click installer on their local machine. Then, run the one-click installer. Make sure you read the terms properly and accept it. C Program XinFin Network will be your destination folder. C User Lenovo App Data Roaming XDC Chain will contain your key store folder. And make sure you create the backup of your key store folder. You need to start the one-click installer with just one click. You can then see the address for the one-click installer. Following this, you can change the network easily from mainnet XinFin network to testnet Opatham. You can see the node Urvashi windows running properly on stats and block is getting synced properly.
Thank you, André, for playing that. As you saw from the demo, we've actually worked quite a bit to make it really, really simple for all the market participants, for the platform providers, as well as the alternative asset lenders, to connect to the network in a very simple way, right? So you may have a cloud subscription. This goes even a few steps easier, that let's say some platforms are already there on Oracle Cloud or Google Cloud, right? They are able to just connect to this node with one click, and then you have all the API connectivity that is enabled using an API bridge called My Contract that basically connects your data feed to a smart contract, and then you're able to talk to other systems, pool with other liquidity, but also doing it in a very decentralized way without losing the control on the transactions. There is obviously the settlement options that are inbuilt, and the API connectivity is the APIs are open for you to connect and try out the network.
Thank you, Atul. This is fascinating because actually it's a new way to bridge those who have the assets, those such as those platforms, at least who are originating those assets, and those who have the liquidity or the risk appetite. So I would think it's very comparable to the traditional methods. I would think this is an additional method compared to issuing notes or creating a fund to pool liquidity that would be allocated to trade assets. And indeed, I'm also discovering this world through my research since 2-3 years in crypto space, cryptocurrency space. And when I see actually the developments of central banks around stable coins and using the same type of technology in a regulated way, under their own control, I would say, is definitely something that is there to develop. So I'm a firm believer of the new options that such technology will offer, but as often the roles for the incumbents, such as the platforms, the banks, the new entrants, remain the same. I understand XinFin is there to help them, offer them a bridge to between the trade space, or I would say the commercial finance, invoice finance, receivables financing space, and the liquidity space, because it's basically an opportunity for those players to work together thanks to a new infrastructure, rather than the existing ones that I would expect are more costly.
Yeah, absolutely. And we have some links here for people who want to go try it out, test it out. Obviously, if you can't figure this stuff out, come talk to us. We are very, very reachable as well for you to help out with this. And yep.
Thank you. So at this point, I'm checking the Q&A. I don't see any questions, but is there anyone that who wants to raise your hand via the Zoom features, raise a question? Do not hesitate to enter those questions into the chat. I understand it's quite a futuristic session, certainly the second part, but we did on purpose because I want to show that the way to create platforms to help SMEs and corporates get funding is basically a concept that is already very well established, and now we see platforms popping up all over the place. So those platforms is not the future for me. It's today. It's there, and there are just additional ones. The future is really about those alternative technologies and highways, basically, for those assets to move from those who own it, create it, the corporates, the SMEs, and then the originators or the platforms, and those who are happy to take them on their own balance sheets, such as those funders. And basically those digital assets is basically for me a new type of highway for assets to move from one party to another party. Is that a fair assumption, Atul, Ritesh?
Yes, absolutely. I think it was very well summarized. And the important point that you made there is that the market is sometimes more ready than you think, right? And that's how most of the people miss out on big developments. So any one of you out there who want to take a leadership role should actually jump in, then wait for it to kind of develop to a point where you'll not have any competitive advantage anymore.
Yeah, and definitely would your platform also support stable coins, because we see stable coins being developed. I just want to reconfirm, because you covered that point, but stable coins being introduced by the central banks. So would your technology be compatible with those?
Yes, and again, coming back to the hybrid blockchain point, that when that I explained in the diagram, that the other circle, right? These are all the legacy. These are all the systems and networks that exist right now or would continue to exist. So if there's a stable coin network deployed by a central bank, then we can actually connect to that. We can take confirmations from those transactions and reflect it on the XDC network. So it's very compatible.
Okay.
Can I?
Yes, Eric.
Thank you, both of you, indeed, for presentation. In the meantime, we have at least two questions I would like you to cover, Andre. The first one is quite straightforward. Somebody asks, what is the DNI initiative, by the way, which will also be discussed in Vienna at our annual meeting. But please, Andre, can you tell us a little bit more about DNI?
So the DNI initiative is an industry initiative called Digital Negotiable Instruments. The purpose is definitely for alternative funders as well as incumbent institutions, banks, to digitize bills of exchange and promissory notes. Often those instruments are required to exist on paper, and the paper is actually an issue for SMEs and sometimes also used by large corporates. It is often used as a collateral for financing. And basically, if it were based on technology rather than paper, it would ease financing. But of course, it's all about digitizing those instruments. Now, once the instrument is originated by a platform using a digital negotiable instrument, such as what this initiative has introduced, which is also using blockchain technology to track the life cycle of the asset, then with XinFin and TradeFinex, there is an opportunity to tokenize it and to get to pass it on to a funder via the blockchain capability of XinFin. Atul, is that correct?
Yes, that's perfect.
Okay.
But in any case, DNI is an initiative from the banks through primarily ITFA, I believe, Andre,
Yes.
that's correct. And Sean Edwards has agreed to come and talk at our WOA convention in Vienna in October about this DNI initiative as well. Inshallah, if we can organize our meeting, which we still plan to do, by the way, but we'll see how things evolve. One more question from Nicolas Henrion, which I believe is a very interesting one. He thanks for the presentation, but he asks if there's an index to track or to benchmark the performance of these assets. Maybe Atul, that's something for you?
Yes, so the good thing about the assets once you tokenize them is most of the data that's relevant for you to track them is already there on the public network. In fact, we do have an exchange interface that maybe you could, it would take obviously longer right now, but maybe you can share URL of it, that you can track the key data and performance indicators. You can do price discovery in much more better way for these assets when they are tokenized versus in a more legacy environment and a closed loop environment.
Yeah, there are also specialized index providers that will consider certain digital assets in their tracking, and that concentrate strictly on index, on building the index and running the index. One of those is Winter Capital in the Nordics, based in Sweden. I don't know of any others from our research so far, but Winter Capital is definitely one, and indeed they will run multiple assets indexes for those assets, sometimes on single asset or a group of assets.
We have time for two more questions, if you agree. Thank you. We have one person asking considering the challenges with COVID-19 and the impact on global trade, how has the implementation of asset tokenization and blockchain been impacted in the short and medium term? I don't know, Atul, if you can also take that question.
Yes, I'll be in fact very excited to answer that. So what's happening obviously in the COVID world and lockdown everywhere is unfortunate. People are losing jobs and all that. But we as a network, because people have realized earlier people didn't take it seriously, but we as a network have actually scaled up almost 8 times in our transactions. So people have started to believe that this is the time for this is more apt right now, and that's the reason why there's a lot more adoption, much in a much faster way.
Okay, thank you. And then the last question is not surprisingly, because when I looked at the list of attendees of today's web meetings, quite a lot of interest from the credit insurance world, which is wonderful. And they ask, how does credit insurance come into the platform fundings? So good question, I think. Atul, can you also take that? Or André?
Yeah, so the simplest way to make it work, and again, I wouldn't talk about the future implementations of CBDCs or something, but this is done in a DeFi environment, decentralized finance environment, existing in a existing blockchain ecosystem world. What you do is you have a way for, so currently let's say USDC, which is a tokenized US dollar, which is managed by a FinCEN regulated or New York NYDFS regulated fund, and those are the assets or US dollar in token form that you can load as a collateral for insurance if there was a default to happen. So what then happens is if the rules or terms for the default ought to be invoked or to be triggered, then you would always have access to this liquid capital that already exists in the token form. So it's much easier and effective to implement than it thinks it is.
Also, the funding platforms are, some of them at least, working certainly with credit insurers. I think the credit insurance function is critical across the board. When those assets are aggregated into the funding platforms, often the challenge, not only in the B2B space, but also in the corporate to bank space, is to get credit insurance first, because the credit insurance for some liquidity funders, for liquidity providers, is critical. So some funders, depending on, of course, the yield they expect and their investment policies, will require credit insurance. So if there is one party that will definitely benefit from all those developments, in my humble view, it's definitely not only the corporates who get more funding capability, more sources of funds, but also the credit insurers who are not only helping the corporates directly, but also helping the banks as originators and helping also the institutional investors as funders in this space. So definitely a key market and a key function that I can only see expanding in the future.
Thank you. We are very much running out of time. We are almost 1 hour. Maybe one last word also about the future, and that's then the World of Open Account future. And I'm using this 30 seconds maybe to make some publicity for a very new initiative that André Casterman and World of Open Account are taking. Maybe André, you can say something about the new learning lab that we plan to build together with you on alternative finance?
Yes, definitely. We see this market evolving rapidly, not only from a technology point of view, but in terms of new entrants as well. From my experience, those advanced technologies, such as what we've presented today with XinFin and TradeFinex, are important not only for the large banks, but also for the new entrants. Often the new entrants are faster at adopting new technologies than incumbents. But of course, such technologies are there for both types of parties. We want, through the Learning Lab on Alternative Finance, to help all of those players, not only the originators, but also the technology providers, as well as the credit insurers, understand how the market is evolving. And again, not only from a technology point of view, but also from a market trend point of view, new types of originators, new types of banks. We will be surprised how financing will expand in ways we could not predict. And this is those market trends we want to track through the alternative finance. We could have called it alternative finance and alternative technologies, but we really want to have a broad perspective on how financing trade financing will happen, focusing primarily on the SME mid-cap market space, where those new trends, new entrants can be identified. So very interesting indeed to start with XinFin today as an alternative technology to help this market. We will hear more about them, but also more about new originators entering the market. And as I said, it's beneficial not only for the corporates, but also for those who are keen to take risks, credit insurers, but also keen to provide liquidity, such as those funders, non-bank funders, for instance.
Thank you indeed, André, and thank you for having taken this initiative. And you will all stay tuned. I would say you will see in the coming weeks more information coming out from World of Open Account with the launch of this new Alternative Finance Learning Lab with new initiatives, new activities, new webinars, and so on. And definitely also we hope to have a panel at our convention in Vienna in October, 5 and 6 of October. Everything is up and running. We have the full support from Raiffeisen International Bank. We have their auditorium for the meeting that is perfectly under control. We have a dinner place, which is also perfectly under control. Everything needs to evolve well as it is going now in the coming months. For the moment, a lot of people are still hesitant. Please do let us know as soon as possible whether you're interested or not in joining us in Vienna. I do understand it's not always easy these days, but we hope by the end of August to have a clear picture whether we can or we can't organize. In any case, the plan is to do it now, and you don't run any risks if you sign up. Because if we, for whatever reason, COVID related, we cannot organize the meeting, you will of course be completely reimbursed should you have paid anything. So that's for some information about the WOA convention. I would only like to terminate or to finish this interesting meeting by thanking Atul and Ritesh very much for your contribution. André, once again, for your wonderful contribution. Thank you very much. And I'm sure there will be more in the coming weeks from you as well. Thank you very much. Talk to you soon.
Thank you. Thank you so much.
Thank you, guys.